Hi, and welcome to another daily recap. So today I'm going to recap day 118, and it's October 18, 2024, Friday. So today also there is no trades. I didn't get any trades on this day. So let us jump into the Microsoft board and see what happened on this day and why I didn't get any trades on this day. So starting off with euro dollar in the daily chart, the swing structure is bullish, internal is bearish, and as expected yesterday, the price mitigated the daily demand and it's now showing a sign of bullish reaction. So there is no sign of bullish order flow shift this week, thus I can look to follow the bearish momentum till there is a strong bullish shift in order flow after mitigating the daily demand. This is annotation that I wrote yesterday, and now the price has mitigated the daily demand and there is some bullish reaction. Longs are also valid as the price can now give a bullish reaction of the daily demand. Thus, I need to see a strong bullish shift in the lower time frames before looking for longs. Lower time frame in the sense H1. So the daily bias is neutral because price can either have a deeper mitigation into the daily demand or it can start to make the start the bullish reaction of this daily demand and then mitigate this daily supply. That's why the bias is neutral. Coming into 4 hour chart, in the 4 hour the swing structure is bearish, the internal is also bearish. So let me zoom in so that you have a better idea of the 4 hour chart. Okay, I think I didn't get a zoomed in version of the chart. It's fine. So if you see in the 4 hour chart, the supply chain is getting respected. So all I can do today is actually Friday. So the supply chain is most likely to get respected, and it is less likely that the price will go against the supply chain that to the high time frame 4 hour chart supply chain. So what I can do is just if the price mitigates this for our supply, I can just look for H1 to chop bearish, and then I can look for low time frame entries and target the weak internal low. That's the maximum I can do today because it's Friday and it's less likely that the price will take strong highs. This is a strong high because it has swept liquidity and it has a ton of displacement. So though it's a new candle, it has swept liquidity and then pushed down. So chances are there that this high could be strong and this supply could hold and push the price down. So jumping into the H1 chart, and yeah, this is even possible with the low resistance liquidity being built up here. So all I want to see is price to tap into the 4 hour chart and the 4 hour to chop bearish, and then I can look for this freshly formed POI, look for M15 entries, and then boom, target the weak internal low of the H1 as well as target the sell side liquidity. So we I would be having a lot of risk to reward, and this could be a high probability trade if everything turns good. So I can look to face these shorts as the price, face the longs as the price has mitigated into the daily demand, and I can look to target the buy side liquidity above the news candle. So this is the buy side liquidity. So to play longs, I need to see a bullish sweep zone to be formed. Obviously, if there is no bullish sweep zone, which means liquidity has been formed. If there is a bullish sweep zone, which means the demand is in control. So I can look to play longs until and unless this buy side liquidity is being taken out. So unfortunately, there is nothing like that. You will see sooner. For shorts, I need to see the price to chop bearish after mitigating the 4 hour supply to play the A2 shorts. It's as simple as that. So at 12:04, uh, sorry, at 7:34, this is not 12:04. This is actually Indian time. At 7:34, price mitigated the 4 hour supply. So thus, all I need to do is wait for the price to chop bearish to target all these low resistance liquidity and eventually target this weak internal low. And 8:43 GMT plus one, price took some buy side liquidity above this low low time frame supply, and then it was about to chalk bearish. So if the price chalks bearish, then I can look. This would be a very great, very strong POI. I can look for shots from this POI using the M15 and then target the Asian low will be my first target, and this low will be my second target, and this will be my third target. So plan is simple. Let's see what happens. And the price made a bearish chalk, but it was more or like more of like a liquidity sweep because price didn't close below. So that's the advantage of using H1 time frame because it combines the benefits of both scalping as well as swing trading. Here you can see if you are using M15, this would be a valid chalk and you would be looking to trade shorts. But since this is H1 time frame, you can clearly see that this is just a weak close. and this would be probably liquidity sweep to take out some sensor liquidity to move further up, and that's exactly what happened. It proved that this was a liquidity sweep, and the price started to move up. So if I was using an M15 time frame, then I would have been caught out, because this would be actually a valid chalk in the M15, and I would be looking to trade with this M15 POR. If I was looking for the M5 confirmations, then that would have been great. Otherwise, if I'm taking risk increase, then that's a lot of chance for the capital to be blown out. So at 11:57, so price did not make the bearish stop with body closure. As I expected, the bearish stock is just a liquidity sweep. Now the price stock bullish. I must now see if price stock bearish to play the phase A2 shorts. I'm not interested in phase D longs, as there is no clear bullish stock. So even this I can consider this as a sell and liquidity sweep, and a bullish sweep zone, but the price is already in the 4 hour supply, and we are we are counter internal. So longs would be very much low probability. I would be expecting the price to again chop bearish, and then I can look for the fresh POI formed during the New York session. Then I can trade using that. That was my only intention, and long were out of my game plans. So at 13:12, price moved further up into the H1 supply. This is kind of breaker block. If you recall from ICT concepts, this is called something called breaker blocks, where price just slip through the news event without respecting this order block. This happens uh, especially during news events. So actually, price started to flip this one, but there is no valid demand zone from which I can take longs. So I just waited for the price to chalk bearish, then boom. Yeah, this Uh, this movement is expected because there is some buy side liquidity above the news candle, and yes, price will be magnetized towards these kind of liquidity pools. But there is no uh, proper POIs from which I can look to take trades. Yeah, I can say that the price has swept the sell side liquidity and then chalk bullish, but you can see this chalk bullish how it chalked. It was not the most convincing chalk, so that's why I didn't take any trades. And the next candle, it closed above. So this I can consider this as my POI, but the third candle just went flying up. So obviously there is nothing to do with this kind of price action and patterns. So I can just sit in the sidelines and see my analysis went perfect, and I protected my capital with this fake chalk. So be happy with what I got plus 0 hour. Come again tomorrow, there will be an opportunity, and then I can go bang on that trade. So until then, sit in the sidelines, be patient. So this is all about EU. So let's jump into GU and see what happened on GU on that day. So in GU, the daily swing structure is bullish. Internal is bearish. So I didn't mark this one. I was fully focused on the liquidity sweep. So the internal structure is actually bearish. It's not bullish. It's actually bearish. And price swept the Wednesday is low, and there is a strong push on the upside. So I can look to follow this bullish momentum till the price reaches the daily supply, after which I can change my bias to bearish if the lower time frame suggested me to do so. And one more thing is that this supply is formed via strong liquidation. This is more likely to be an institutional supply, and there is a lot of chance that the price could engineer buy sell liquidity to push further down. So I think this concept I have discussed yesterday itself, how the price can engineer buy sell liquidity and why the price will engineer the buy sell liquidity. So jumping into the 4-hour chart, the swing structure is bearish, internal is also bearish. Now we are in the internal pullback phase. Let me zoom in. So this is the current internal structure that I'm dealing with in the 4-hour chart. So after a bearish swing boss, I can expect a swing pullback. Currently the price swept sell side liquidity and it has chalked bullish. So you can see that there is sell side liquidity sweep and then price has chalked bullish. But this I can consider this as the POI. If the price taps into this one, I can look to go bullish, targeting the buy side liquidity, the 4-hour buy side liquidity. So I said this is a 4-hour buy side liquidity yesterday itself. So you can just refer the video. So yesterday was this liquidity pool was my target yesterday, but the price didn't go to that level. But today I'm expecting the price to take out that buy side liquidity. Though this is a low probability demand, but since the high time frames are suggesting me to go bullish, so this even this POIs can be respected and the price can push up. So coming into the H1, the thing here is H1, this um, POI is just a low resistance liquidity that is seen in H1. And one more thing is that while doing the analysis, it was 7.5, and at 7 a.m. UTC plus one, there was a high impact news for GU, and GU, I mean in the GU means GBB. So that currency got affected and price went up and took the buy side liquidity as I expected. So that was the target yesterday, and now start of the session, the target has been achieved. So what I can do now, so I can just play the pro internal trade, sorry, a counter internal pullback trade. So what I can do is I can wait for the price to stop bearish, and then I can look to play the shorts targeting the uh, low resistance liquidity below. This shorts idea would be phase B shorts. Suppose if there is one more internal structure being formed, then that would be phase A. And yeah, there was another news at sorry, this is the news scandal. It's that it kept going up, up, and up, and eventually it met this H1 POI, and then there was some selling pressure coming down. So the only way that I could go for shorts is when the price chalks bearish, and then I can look for shorts. So if that doesn't happen, then no trades today, even with this ton of sell side liquidity resting below. At 10 a.m. GMT plus one, so still the there is no bearish talk, and the price is now coming down to take out the sell side liquidity. So nothing interesting at 13:13. Before I went to lunch, there was nothing interesting, and the price is still consolidated. So yeah, and I come to the end of the session. So there is no chalk bearish, so that's why I didn't take any shorts. And the people who took the early shorts, I mean the early sellers, could have been trapped out because the price went up late in the session to trap all the buy side liquidity. So I came to the market expecting the price to take out the 4-hour buy side liquidity and expecting to play some longs. But with the news, price took the buy side liquidity without giving me a trading opportunity. When the price mitigated the daily 4-hour slash H1 supply, my bias shifted bearish and I wanted to play the phase B shorts with turn of low resistance sell side liquidity resting below. The price never made a bearish chalk, which is the least I expected to happen. This did not take any, thus I did not take any trades today. So it is clear that in both GU as well as CU, because of the high impact news, the price started to consolidate during London and make massive expansions during New York. Yeah, it is what it is. There is no trades on this day. So yeah, in this week I got only one trade, and that too it was a break-even trade. So probably last week I got at least a winner and a loser, but this week I just got you know, one break-even trade. So when you compare this month with the previous month, it's a lot better because in previous months I used to there was a used drawdown period. I used to take all the trades. So in this month I've cut short most of my losses, and that's why there are so many no trades day. The number of loss I just cut short my number of losses. So hope I just do the same for the rest of the month, protect my capital, and just grab the high probability conditions and just grab those trades and just keep the equity curve growing. So yeah, that's it from today and this week. So see you tomorrow on October 21, 2024. So until then, cheers guys, bye.